What's going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to go over some expectations for this upcoming week, what might cause some volatility in the stock price, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So starting off with companies unveiling their earnings, that is going to be a big deal for the market this week. So we have Palantir, him and hers, Uber, AMD, Robinhood, a lot of big names that in the past has really shown that they can move the market. And I think this upcoming week we have Robinhood, because I think there's a lot of high expectations associated to their earnings and how they might be entering into banking. And so that potentially might cause some disruption within SoFi. I know it's all fun competition between the two, but we have seen every time a big Robinhood announcement has been made about them wanting or thinking about going into banking, SoFi just goes down a little bit. Nothing significant, not 10+%, but it does go down slightly. So just somewhat keep that on your radar. So that is Wednesday after hours. One thing to take note of though, when it comes to all these companies unveiling their earnings, the market's been somewhat paying attention to a lot of the key metrics more than what it has in previous quarters. Whereas previous quarters, I think the biggest focus was future guidance and how the kind of companies were really going to mitigate risk around all the tariffs and stuff like that. So this time around, I think the market's being a little bit more strict. Aside from that though, data points, we have a lot of big things coming out this week that could really push the market a little bit higher. So Monday we have S&P Global Manufacturing, ISM Manufacturing, and in both cases 50 is a key pivot. Anything above 50 shows more of an expansion. We have a lot of Fed speakers, and based on a lot of the things that have been coming out, there's a lot of topics that they could really, hot topics that they could bring up. So that in among itself could cause some volatility. In SoFi's case, Wednesday is going to be a big day. So for instance, you have the MBA mortgage applications. And so this technically could give some insight to consumers. So we did have Wednesday and Thursday last week, largely because of good old Powell. Like the market freaked out because and started to assume the worst coming from consumers. That will give some insight to that. So of course, if things kind of the number goes down a little bit, that could show more weakening kind of confidence. If things inversely just go higher, that could show improving consumer sentiment. But Powell really kind of talked about subprime credit and just people assume the worst. So that will give some initial insight. So that'll be Wednesday before the market does open. And unfortunately, because of the whole shutdown, we haven't really received that much labor linked data points as what we would normally like. And that's one thing, in my opinion, why Powell really didn't give any kind of guidance for December. And so right now, going into this week, for at least the December 10th meeting, there is a 63% likelihood of a 25 basis point cut. But on Wednesday, we do have ADP employment, followed by on Thursday, challenge job cuts. So two very big labor data points. And so I don't know why those are showing up, because we still have the government shutdown. So initial jobless claims and a lot of other key labor data is still on pause. But it looks like those are on the table for this week. So potentially, depending on how they come in, that will most likely change people's outlook of the December 10th meeting. Either start to really price in that 25 basis point cut, or at least start to assume it, or kind of follow what Powell mentioned and just move towards no cut. So definitely we'll see some big changes for this when it comes down to this week. And then on Friday, we have Michigan consumer sentiment. So that's going to be a big inflationary data point for this week. So a lot of volatility. Nothing really planned associated to SoFi for this week that I am aware of. The Elliott wave technicals though is projecting for SoFi to really move higher. So it does have a pivot point of 26.23, and for as long as SoFi is able to hold that, then you can see about 33.44 to 35.24 on the table in the short term. So again, that's something just to keep in mind. Aside from that, we have received quite a few analyst ratings coming down the pipeline, all fairly optimistic. So we had 38, 37, a couple of 37s, I do believe. Or sorry, just the one. So 137, 36, 35, and so forth. So there might be potentially one or two maybe last minute stragglers that do give ratings. Of course, one thing that always does happen, usually the second week following their earnings, is all the bears give re-ratings. So anticipate most likely this week Bank of America to give one, Compass Point, and possibly even Morgan Stanley. Obviously, I think their full intention to do that, and the timing is more manipulative rather than anything, but it is what it is. It's what they always do. Going into this upcoming week, 8.43% of the free floats being shorted, works out to be 99.7 million shares overall being shorted. So shorts leading into SoFi's earnings, they kind of knew what was up and they started to really return a lot. So they went from around 9.94% to where it is now. So as I even mentioned several months ago, I felt that we were going to be around the 8% range leading into SoFi's earnings. And that is exactly how things did play out. So in my opinion, unless things really crap really hits the fan on a macro standpoint, I do not see SoFi, the short interest, getting back to double digits. So most likely in the foreseeable future, this won't be that big of a deal. And still, in comparison to what has happened with it in the past, SoFi shorts make up for maybe about 30% of the daily volume now, whereas back in the day it was 50, sometimes even 60%. So definitely something to keep in mind. From a bull standpoint, you see a consensus for it to be roughly around that $30 to $31 for this upcoming week. Bears are anticipating for it to be kind of sub 28. So definitely a little bit more upside than down. A couple of key points though to watch for with it at 29.68. It is trading currently between this R2 and this R1. So 29.33 is going to be that key support. We did see that nice push higher though. That was able to get past that 29.33. That, in my opinion, was just that LinkedIn post that I kind of brought up on the Friday video. So just watch for that 29.33 and then 26.81 to be support levels, and then 30.89 and 33.41 is going to be the next round target / resistance points. So for those of you that have tuned into my Patreon and have kind of looked at that, I did just do a SoFi update because when it was roughly around, I think, the high 25s, I did give a new update and I felt that $32 was realistic. So that's kind of my target I gave, and because of the earnings and especially post earnings, it did hit that. So did so far have a all-time high of 32.57, so hit my target, and so I just give a new one. So if you're kind of curious on where I do realistically see things going for SoFi, definitely pop over there, link in the description below and also the comments. But aside from that though, looking into this upcoming week, SoFi's technicals, I feel like did show some signs that wanted to consolidate. Luckily enough, like I mentioned, that LinkedIn post just came perfect timing, so it was able to close above that 10-day moving average. Because of the recent momentum, it did break off that overbought status, so it's kind of getting somewhat neutral-ish. So if SoFi or the broader market has some good catalyst, you could see a nice V-shaped push higher because of that. Market position, so this right here, you see a lot more willing buyers over the last couple of trading days, although you see a lot of willing sellers up until around that $30 range. So if SoFi gets a nice gentle push, then you could see a nice kind of, at least in the short term, push to around that $31 range. And again, the Elliott Wave Technicals is projecting for it to kind of hit that 35 range, and I think that's fairly realistic. My target's a little bit higher than that, so again, pop over and take a look at that. Aside from all of that fun stuff though, there's been a little bit more articles coming out over the weekend, and this is exactly one thing I mentioned on Friday, didn't really happen, but was going to happen. So on Friday I said, hey, you know what, ever since SoFi's earnings, we surprisingly haven't had all that much in articles, only because we had Apple, Amazon, we had a lot of other big companies putting out their earnings, and that was kind of the focus of the market. Even though SoFi hit kick-ass earnings, it was more of a secondary priority. So the fact that now over the weekend people have time to actually dive deep into SoFi's earnings, they realize how amazing it is. So we are seeing a lot more articles over the last couple of trading days, or over the last couple days in general. So I think that could also help SoFi going into this upcoming week. So all in all, I'm fairly optimistic, but it will come down to companies unveiling the earnings, the labor data, so that could really move the market. I've stated this time and time again. SoFi is one of those very all over the place stocks. Best thing to do is just dollar cost average. That's going to be how you make the most money, in my opinion. So let me know your thoughts on SoFi. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And like I said, pop over to my Patreon. I do put out daily day trades, numerous swing trades, and many of them have been absolutely on point, such as SoFi and many others. So definitely worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.